let me say, when we talked about doubling the balance sheet, we talked about somewhere in July 2023, saying that the bank need to double the balance sheet. Doubling the balance sheet is more of a roadmap, and we said that the doubling is more of a rolling plan. That means when we talked about 2023, 28 over 23, 29 over 24, 30 over 25, in that kind of a number. So when we looked at the 5 years growth prior to that, the CAGR growth of the business was almost at 12%. And in case for next 5 years, we can make the CAGR at 13%, we are almost there at doubling the balance sheet. So it's more of a roadmap that we thought that we need to, some kind of a glide path for the bank, not only me, the entire management, the entire field force. They need to see the goalpost, and that is what a goalpost we set in. But saying so, the way that we are trying to construct the book and the balance sheet, look, we have a significant international presence. And the opportunity for us to grow higher in international is always there. Secondly, we also said that we need to retailize our book more. So if you look at our RAM growth almost for last many quarters, almost at 18-19%. The retail is growing more than 20% consistently for last 13-14 quarters. So scenario like that, the focus would be more on the retail. Secondly, on the corporate book, we wanted to focus big time with regard to the mid-corporate, the mid-size account. And that gives you a very strong, what you can say, a higher income potential, the collateral coverage and all those things. And on the physical scale, we said in last 1 year itself, we would have opened more than 250 branches now. What is happening on the Indian, although we have a very large rural and semi-urban branches, but on the metro side, a lot of markets are moving to a lot of micro markets where the growth potential is much higher. So we are opening branches in those, so we are expanding in terms of span also. I think adding 1% and digital has been a key enabler as far as the bank concerned. Bank of Baroda has been, I think, right on the curve in terms of the digital adoption. And all this, we are quite hopeful that we can add almost 1 to 1.5% growth. That is what can be extra vis-a-vis the growth we had in the past. And the moment we are there, we are almost at the double the number. So it's a rolling plan. So when we are in 2025, we are talking about 2030 over 25. Moment you get into next year, it will be 31 over 26. So it gives what you can say, goalpost for all the field people to look that the bank need to double the balance sheet.
But carrying the weight and the legacy of the institution that you are, over a century old now, just tell us what kind of changes you're pushing into the bank, whether that is cultural or governance, to be able to move at the speed of a startup today, because that's what you have to do if you have to realize some of these ambitions.
Absolutely, you are right on that. Any organization, particularly legacy like us, 118 years. See, one of the key themes behind the legacy organization like us, we are predominantly government owned, that you have the trust and the safety aspect as a fundamental factor while driving business. And it is there for last 118 years and going to be there for many more years from now. At the same time, Bank of Baroda is one bank, whether it is culturally or digitally, we are more agile as compared to what we are in the past. So what I mean by agile that, culturally, suppose I talk about the HR part, we have built in huge capacity within the HR workforce in terms of adapting to changes. And where one bank experimented the lateral hire and the internal talent beautifully well, so that we on any business line, we are at the top of the curve. I think culturally, the bank has been quite well positioned to have the best of what you can say, the skill set or the knowledge set. That's important to drive the bank forward. That is point one. Secondly, on the digital architecture, the design has been thanks to my digital team. We are not in a manner like a waterfall structure. We are more of an agile structure where if there is a changes happening, then the digital system would quite in a position to change to the new architecture that is likely to come. So in that way, we encourage more of open banking. We encourage more of agility in terms of the digital design itself. A couple of initiatives wherein, the internet banking or mobile banking are something a very front-facing application vis-a-vis customer. And now both the applications we are trying to have it within us so that we can design those applications as per our requirement. So in terms of the digital infrastructure and the design, the structures are more agile to look into the changes. In terms of human resources, I think Bank of Baroda lucky to have a kind of a cultural integration in terms of both internal and external working well, and wherever the bank need to hire people to be at the curve, we are hiring people. This something worked very well. Look, around 4-5 years back, Bank of Baroda was the only bank to come out with a shared service company. The shared service company was called BGSS, significantly supporting manpower to the bank. So these are the innovativeness. I think the bank is, even if it has a legacy of 118 years, but the bank is quite as young as like any new entity, and trying to adapt to changes which again the market would like you to change. We always say that while operating model, I need to be relevant for my business, relevant for my structure, relevant to the market. At the same time, whatever dominance we have in the market in terms of a market share of 6%, so I'll not be losing that dominance at all. So we're trying to construct both in terms of creating agility within rather than giving any rigidity to not to change.
You know, but to stay young, to stay relevant, to become agile, what are you doing to adopt some of these newer technologies that are coming into the fore? And, you know, every hall here, we're having one or the other conversation about artificial intelligence. Yeah. What is the real use case beyond just chat bots? You know, what is a bank like you doing with AI to strengthen your systems and even on cyber security?
That's very critical when we do have such a huge superstructure of ITA. All these aspects are very, very important. Look, the usage of AI as far as the bank is concerned in multiple business lines. And whether it starts with the risk modeling, whether it starts with the fraud risk management, whether it is an underwriting scoring model, the usage has been significant. And it has been there already. And always we treat AI as something to augment rather than supplement something. So AI, the usage of AI within the bank is to augment processes, augment in terms of the ease of doing banking. So a couple of things that we have done significantly in the last 2 years, particularly the AI, particularly on the Gen AI space, wherein we deployed one is a bot called Aditi, who can interact on a live basis with customer to meet the customer service requirement. So as compared to somebody talking to the call center, somebody can interact with Aditi on a live basis and get the services. And recently we deployed a virtual branch in one of our physical branch, where a customer can walk into a small enclosure and interact with the virtual robotic bot and get 18 transactional services over there. So the Aditi that we talked about is that talks about a non-financial service, a robotic bot. But the virtual branch which I'm talking about, there somebody can get the transactional rights to do transaction with a human, human-like robotic bot. And that gives something a significant difference there. The point here is that when we are looking at the new age banking, the entire world is going digital. At that time, we as a bank, while structuring the branch modeling, can you have a hybrid structure wherein you can cater to the requirement of the people who would like to be transacting with you on digital. Yeah. At the same time, those set of customer who like physical and they continue to be in the physical banking. So we as a bank on the AI usage has been significant. We always internally when we design our own policy, we always say let us be on the curve or the edge of the curve. Would not like on the technology piece anywhere. Currently, I am spending almost 10% of my operating profit on technology, be it capex or opex. And as a policy, we said if there be need be, we can go up to 15% of the operating profit as an investment in tech space. So we are quite keen that the tech investment should go off, the customer experience should improve, the ease of banking for the customer should improve. At the same time, the quality of life within me, my own banker's friend working in the bank, that should be also made much easier.
Well, that's an interesting concept, a phygital branch, so to speak, for customers that want both the physical experience, sometimes only the digital experience. But, you know, we also have to talk about this global push for banks because you're balancing a lot of things on your plate. On one hand, you're talking about digital cyber security, doubling your balance sheet, your AI adoption, but then you also have to look outward because Indian corporates here are also growing. They're making acquisitions overseas, FDI coming into the country. What are you doing to pivot to serve this global diaspora, and how do some of the recent reforms from RBI, particularly when it comes to M&A financing, for instance, going to aid this transformation?
You said right, Ritu. The fact is that our tagline is India's international bank. So in terms of capacity to grow India internationally, the bank is right there, right? So if you look at the international book, as far as Bank of Baroda is concerned, it almost accounts 16-17% of the global book as the book in international. And 3 years back, this was almost at 12%. So from 12%, we have improved to 16%, and we expect to again cross 20% in a couple of years from now. So in terms of capacity, we do have now 85 branches outside India. So one thing that we are working, a couple of years back, we had 95 branches. We scaled down to 84. We wanted to optimize that. But having done that now, I think Bank of Baroda has the capacity now to expand further. Currently, as on today, we are looking at, a couple of centers overseas to expand. We are looking at a couple of inorganic buy also so that we can scale up. Look, the concept that we are talking about Bank of Baroda International is that, look, India is trying to, internationalize itself more and more. And Bank of Baroda is the right platform for India to internationalize itself, right? So that's something, I think as a structure, we are already there and are going to play a significant role. The second thing, a couple of policy measures that recently announced in terms of merger and acquisition financing. See, globally, we participate in a lot of global syndication market. We are one of the good approved lender in the global syndication market. And there, all these transactions do happen quite regularly, wherein banks coming together as a syndicator to fund debt financing for a merger and acquisition equity finance, right? So ultimately, the assets should be there with you on an indirect manner. So I think that's a very good move by India, because the more we are getting into, we are getting into more of a mature market. I think all these products which are required for the country has to be there, and this is the right move to have thinking of banks financing the merger and acquisition. Secondly, the bigger theme here, how do you again help Indian corporate for a trade support overseas? And bank like us, we do have large presence, and I think we are working on to how do you increase the trade book so that Indian corporate are more encouraged to have all those trade to other countries. Particularly, I was part of one of the conclave recently, which was a African, how do you convert aid to investment? And Bank of Baroda having large presence in Africa. And I was part of that conversation therein. I think there are a lot of things that you can do vis-a-vis to promote Indians trade outside. Merger of acquisition finance is going to be a significant boost for that. I think as a bank, we are the right platform to make India grow its scale outside India in terms of trade business, in terms of investment, in terms of, talking about internationalizing India more outside India, and that's something which we are quite capable of.
But in 3 simple points, if you could put it, what would a large-scale, globally competitive Bank of Baroda look like, say, 10 years down the line? And the 3 things that would be needed right now to make that ambition get realized?
We do have a fair ambition because, see, look, within India, we want to, increase our market share. That's very significant. And, obviously, scale, there are debates happening, but only one thing I can say that as far as Bank of Baroda is concerned, 5 years, we're talking about doubling balance sheet. We are at 27 lakhs, going to be 54 lakhs kind of a number, organic number, which I can say. But one thing that we are completely aligned that how do India can add scale outside India. And we are the right platform for that, actually. We are one bank, other than the largest bank, we are the second bank, having significant business outside India. And there, as a policy, internally, like currently it's 16% of the global book, the international book as a percentage of global book. We intend to go to 20-25 level in a couple of years' time.
So a quarter of your business is going to come from international banking?
It is going to be in next 3 to 5 years. We are working on that. We are working on how to, that's why I talked about a couple of, now we are thinking of expanding overseas. We are looking at inorganic opportunity. I think trade, we are, as a product, we are quite positive.
Okay.
Indian businesses now thinking global now, a lot of conversation happening on that. Now the Indian banks allowed for financing merger and acquisition, a big change in policy is going to help on this. So all these things, I think the bank is quite capable, and rightly so, because we are the India's international bank. And if we do not be on the what you can say, the first mover on this, I think we'll be feeling in our duty on that.
Well, we've spoken about the global trends, but you can't really be a bank of the future unless you cater to these future generations, the younger generations. What are the changing patterns you're seeing with Gen Z and beyond? And how are you adapting at Bob World, for instance? What are the changes, innovations you're bringing about in your own app to cater to the changing needs?
You are right on that. Actually, as I said, when we announced a lot of these digital measures, the idea was how do I cater to the Gen Z customers. And I just tell you one data point saying that many of the metro branches, the pre-COVID and post-COVID, the footfalls have gone down. Why the footfalls have gone down? Because many of the people now completely comfortable doing a digital transaction rather than coming to the branch. So when we experimented hybrid branches, which is in the form of physical branch, and offering, look, on a normal digital transaction through an app, you can do only one transaction. But you can't do multiple. Suppose I want to interact with a call center executive. I want to do a kiosk thing. I want to inquire about product feature. I want to like multiple that physical, the digital space within the physical branch, all these facilities are available. The idea is to again pull the customer again back into the branch. And the moment somebody comes to a digital portion of a physical branch, all the products and services with the physical is visible to him on the eyes. And he will be enticed to get into proceed further and do a physical transaction also, the physical interaction also. So that's the agility that we want to bring in on the branch structure. Bob World is one of the super app we have, and the customer base is significant. We are coming out with a new version of Bob World maybe in a month time or a month and a half time, which talks about a significant better customer experience while dealing with the app. And it would have better safety feature, better protocols therein. And one big piece in the new version of the Bob World is that we wanted to add a lot of e-commerce into it. So, I mean, suppose you are getting into a UPI app at this point of time. Apart from the UPI, you can do multiple other e-commerce transactions like booking a ticket, going for a movie, multiple aspects.
You want the customer to not leave the app.
You not leave that.
Use everything.
So
on
once
the
you
app.
get into the app, do everything banking requirement in the app itself. So that's the version 2 of Bob World we are talking about.
You know, has your view on collaboration or partnership with fintechs evolved over time? You've set up your own subsidiary at Bank of Baroda to experiment and bring in, adopt new technology. Do you still feel the same need you did 5 years back to partner with fintechs, or do you think you want to build those capabilities in-house, or perhaps look at some acquisitions rather than collaborations? How has the view changed?
I think the fintech space is a beautiful thing that happened to India and Indian economy. And as on today, if I believe I am using multiple scoring model, underwriting model, multiple digital offering, backend there are a lot of tie-ups already there. As on today, we have 25 odd fintech tie-ups as on today. The digital interaction is 100 plus in different application and platform. So we strongly believe these collaborative efforts have given the right dividend for us, and will continue to continue with the fintech partnership. Okay. At the same time, as you rightly said, we activated a company called BSTL, Baroda Chand Technology. And what are the purpose of this particular company? This typically can behave as a fintech company. It can get into the payment space like any other bank, any other. So look, the Bob World is only for customer. But now if you take about any UPI app, they are customer agnostic in the sense that customer can have any bank. So we have two super app now. Bob World is one for the customer, another is a Bob EPA, which again is super app and competing in the market like any other generic UPI app. But here it can acquire both customer and non-customer. So my ability to get non-customer is something key that we understood that the bank must focus on. And maybe at some point of time, this digital asset can be part of the BSTL, the Baroda Chand technology. This is one. Secondly, a lot of emerging technology, both in terms of fintech and others happening in the market. For that, you need to invest. Either you can, as you rightly said, you can acquire or you can invest. So what we have decided, a lot of emerging technology, I think this entity is the right entity to invest into emerging technology, create those solution or application for the bank, and that would be deployed. So that my existing bandwidth to support a huge IT is not getting some way compromise because my focus too much on the emerging technology. So we have segregated emerging technology outside the bank. The normal support system should be within the bank. And this entity can really compete with fintech company and create those kind of experience for customer, targeting non-customer equally for them, so that we get the right value and look at the journey of the fintech happening in India, I think as a conglomerate rather. I think I'm on the banking and also I'm on the fintech. Well, so I capture both the world, that is what the thinking, and that is what can give us the right dividend.
Well, you've given us a lot to think about, but before we close the conversation, I do want to touch upon an important subject, and that is sustainability and what you're doing at Bank of Baroda to build more sustainable practices so that ESG, it's not just a checkbox exercise. I mean, take us through some of the measures you've put in place on that front.
I think the bank, one of the core themes for the bank while doing business is to get into the ESG big time, and how do you ensure that you adhere to the ESG. As far as ESG, the S and G part, the banks have been doing since decades and decades and decades. Of late, we focus more on the environmental side. We are one bank. First, when we thought of ESG, we thought let us come out with a different logo, which again house all ESG piece into a logo as compared to the Bank of Baroda generic logo. So we have a different Bob Earth logo that talks about ESG housing under that particular logo. At the same time, we are one of the banks to adopt a ESG policy and announce that to the market publicly. There it talks about getting a net carbon zero by 2057, that is the 150th year of Bank of Baroda Foundation year. At the same time, by 2034, we want to have a carbon scope 1 and 2 emission reducing by 75%. We announced a lot of measures within the policy, which is publicly now available therein. At the same time, we have taken renewable sector as a champion sector for the bank, and for last 3 years, I think on the lending side, we have created almost more than $3 billion USD book on the renewable side. In terms of my own internal processes, we have made all our, most of the processes more of a paperless driven approval process so that we are not consuming paper. Many of the buildings have been made green. The usage of the solar tree have been wherever it's possible, we have planted that. Recently, we have come out with a new concept within BKC called Bob Forest.
Bob Forest?
Yeah.
What is that?
So we have 2 buildings in BKC. The other building had a bit of space over there. So we have constructed a forest in BKC itself with 100 different varieties of what you can say from the Sahadri range of herbs, plants, species therein. And it's a beautiful, having something a forest within BKC itself is a, so we have created the Bob Forest, going to replicate this in multiple centers across the country now. So on the ESG is the core theme of the bank, and we think that gives us the right capital in terms of, look, all this financial part is something which are captured in terms of numbers. But ESG is something yet to be captured as a number.
Yeah.
We have started documenting all these numbers to create a book. We have been rated on the ESG now. Our rating is strong now. Yeah. So I think, and we have a couple of international lines to support the ESG activity within India. So I think the bank is quite aligned in terms of how do you construct the ESG. What do you mean to say? Sustainable business that talks about process, practices, everything together. At the same time, driving the doubling balance sheet that we are talking about.
Well, I can tell that with the level of enthusiasm you've shown answering this particular question compared to everything else we've been talking about, just the last few minutes. So if I may take the liberty of doing a quick rapid fire with you to get some more points out, and just one word answers, Mr. Chand. One fintech or fintech trend that genuinely excites you right now?
See, I'm very fond of India getting a global payment space, and UPI is something a game changer whenever I travel abroad.
Okay.
And meet with the regulator, they are so fond of this UPI. So with this now, the UPI, the scope of UPI can go beyond transaction and get, now today we have announced the settlement system here.
Yeah.
Where again, the foreign settlement can happen instantly. So there are a lot of other payment space which I think there are work going on therein, and I think that's really exciting to get a real usage of blockchain, everything on the payment space.
Okay.
That would significantly reduce the, what you can say, the manpower requirement, at the same time improve efficiency.
What will the future of money look like? Will it be completely cashless? Will it be wallets? Will it be crypto or something else?
I'm fond of CBDC.
CBDC.
I have multiple times I said that CBDC is going to be the game changer.
Okay.
And in one of the conversation I said, like when the UPI first came in, people said that I'm able to do a transaction by credit, why should I make a debit therein? But the sheer ease of doing transaction pulled everybody into UPI. Similarly, I think CBDC is going to be the game changer. We also have a couple of announcement in the Global FinFest itself.
Which we'll wait to hear.
Yeah, and I think the CBDC is going to be a game changer, and we as a bank anchoring with the Reserve Bank of India can drive strongly on the CBDC.
When was the last time you used cash?
Oh. Recently I traveled somewhere, so I had to withdraw cash because cashless and cash both has to go simultaneously. You can't completely do away with cash. So cash is a requirement, but it's not significant as far as I know.
One big regulatory change that will move the needle on financial inclusion.
Financial inclusion, look, again, when we structure Bank of Baroda, they are in the mass market and also in the premium market. Only on financial inclusion, I tell you, I do have a BC points, almost 45,000 BC agents now. My market share is 6%, but my share in the Jan Dhan account is 18%. I have 7.5 crore of customers Jan Dhan account with me. The deposit in all the 7.5 crore of Jan Dhan account is 44,000 crore. So I think financial inclusion has really, when we operate as a bank, because we are a universal bank, we need to be in all segments of the market. So actually, one of the growth model, the business engine or the rule engine for the bank is to how do you make strategic business unit who focus on their own area of activity, and financial inclusion, the team is driving very strong, and we are quite, what you can say, ahead of the curve in terms of financial inclusion initiative.
Okay, what is the single biggest misconception outsiders may have about public sector banks today?
I don't think there is a misconception therein, but normally when I interact with people, my own relatives, sometimes they feel that suppose they get into a branch, how they would be received by the branch. And I think that's a complete misconception, because the services in branches, you can't differentiate any bank for the matter. Rather, I would put public sector banks, because of the customer service initiative that we are running, they would be better than others.
Well,
so this misconception has to go, saying that suppose he walks into a public sector bank, any customer, small customer, the service, there can be a differential between bank X or bank Y. Now the service have standardized, or rather better, I would put it, rather it would be any inferior.
A banking practice you think will not exist in 5 years from now?
Look at the small value, see, we are running a digital lending book. The book is almost now 40,000 crore.
Yeah.
And here a small ticket like personal loan. Earlier, people used to walk into a branch to get a personal loan. Now they are not required to go. So in terms of small ticket transaction, although banks would go more and more retail, but within the retail also, there would be a segment of the market where completely it would be digital. So there, you do not need to go to the branch. In that way, the banking would be more and more, what you can say, slightly wholesale, although the service you would get.
Okay.
But to a branch banking, you'll be more wholesale. So I think that can be a change that can come to India.
Okay, finally, the last question. What is the one thing in, or rather, what is one thing in technology that can never replace, in banking?
So banking is a technology driven, because whatever we do, my co-banking would continue as it is, because that's the powerhouse.
Okay.
So what you can develop or innovate is on the peripheral to the co-banking, right? And that is what happening actually, all these application, whatever fintech, everything, that is only to supplement or augment a part of the workforce, a part of the process, which was earlier manual, now going to be digital. But the core banking cannot be replaced actually globally also anywhere. Core banking has to be robust. We need to invest more time to understand core banking, and how do you again build in analytics on that. And now DPDP Act is coming. It will be much more important for a bank like us to see that we strictly comply to the DPDP Act, at the same time store the data in a manner which talks about safety, security, and it brings trust.
Well, on that note, Mr. Chand, thank you. It was fabulous speaking with you, and thank you for being so candid with us. And thank you all for being such a wonderful audience. A big round of applause for Mr. Chand.
Thank you.
Thank you.
Thank you so much, Ms. Ritu, and thank you, Dr. Chand. I think that was truly a seamless conversation. We really loved the rapid fire round as well. I request you to just come together for a quick photo that I'd like to capture at this point in time. But truly enjoyed this conversation, and I think some really good takeaways from this conversation as well. Thank you so much once again. Thank you for being part of GFF 2025. Thank you. All right, ladies and gentlemen, with that, we will be taking a short break. We shall be resuming right here back at 3 p.m. So request you all to be back in time at 3 p.m. We have our speakers who are all set, and our next set of sessions that will also be underway here at the Grand Theatre at GFF 2025. Thank you so much.
My apologies for starting with a delay. That's because I have come armed with a lot of statistics on how many people India has already onboarded onto the digital platform. This is from a NSS, National Sample Survey of the Ministry of Statistics. As official as it gets, numbers in India, approximately 85.5% of households possess at least one smartphone. Around 86.3% households in India have access to internet within the household premises. And then there's more data in terms of growth of digitization. While China dominates in value, in terms of number of transactions, India processes the largest number of real-time digital transactions globally, accounting for 50% of the world's total, significantly higher than the combined volumes of US, China, and EU. So we have onboarded a lot. Otherwise, you can't be processing the maximum number of transactions in the world, accounting for 50% of transactions onboarded. So a lot has been done. We are now talking about onboarding the next 300 million. But what is the first? Is it the first 300, 200, 100? I think that question will go to Lalita. As the CEO of Bheem, I guess best placed, how many have we onboarded in terms of digital payments?
I think it's over 400 million, about 400 to 450 million users have been onboarded on digital payments, Lata, so far.
And what is the pace of growth? I mean, how much was it last year, for instance, or the year before?
Should be about 12% CAGR will be the pace of growth. While I'm saying that there are more than 400 million users onboarded, there will also be people who are onboarded but not utilizing fully because of various inhibitions.
That includes the 400 million?
Yes, which we will cover during the course of the panel, I'm very sure. But yes, it includes that also.
Why don't you start from there? Okay. I'm not being partial to her because she's a woman. It's because, Bheem represents NPCI, which is the, organization that has laid the rails for digitalization in India and digitized payments. So over to you, Lalita. What inhibits people who have been onboarded but not using?
Okay. So I think a couple of things. One thing that we had done a survey a few months back when we were trying to relaunch the Bheem app. And one of the things that came to us as a feedback was that people feel that using UPI or using a digital payment as opposed to a credit card may not give them a credit score, right? When you use a debit instrument, you don't get a credit score, right? That's one. Second, they did not know if the payment fails, be it a card payment or a UPI payment or anything else. Whom do I go to? What do I do? I'm supposed to raise a dispute. I raise a dispute, and then it goes into a black box. I don't know what happens. Will I lose money? If I lose money, will I get money back? And then there are a lot of these cohorts, which are communities, right? So one bad thing happens to one person in the community, the entire community feels that, you know what, better to stay safe, right? So there are people who've got onboarded because of a lot of interest and enthusiasm. There will be some of them who are not using it, which is also a part of this 490 million. And that is our endeavor to solve this. We also have a set of people like aged parents of all of ours who want to use, who consume a lot of digital content. All of them are available on internet and WhatsApp and do a lot of voice videos and audios. But they feel that this is probably alien to them. So there are multiple cohorts, and these are the people who have onboarded but not used.
Okay, actually, you're already giving us, the obstacles to the next 300 million in what you've said. But let me come to that, Mr. Lakshmi Narayan. To onboard, we have reached what, 400, 490, she said. For the next 300, what would occur to you as the first problem of onboarding?
Yeah, I think I was asking the question, why do we want to onboard the next 300?
Okay. Well, if you want to give yourself that question, then go ahead.
No, I suppose there are answers to that, but I won't. But I think, what has got us to the first 400 will not get us to the next 300. And it reminds me of, I think it requires a full rethinking of the business model. The stakeholders in the system today, the banks, the merchants, the customers, what's in it for them in the rural area to onboard into this is not very clear. Banks are also already straining with the incentives taken away from them. They just have to invest more and more infrastructure. And you add 300 million more, their cost is going to go up.
So one disincentive for banks is clear.
Yeah, and for the merchants, clearly, they don't see any incentives on accepting digital transactions because they're happy with the cash. Their inventory turn is much faster if they had the cash on hand rather than waiting for settlements and some of the issues that Lalitha talked about if refunds don't happen. And similarly for the customers as well. There is no incentive for them. Credit scoring is one of them. But really there is no incentive for them to move to the digital platform. So I think that's the set of three things. I think it's the business model itself needs to be rethought. And I don't think, as I said, what got us to the first 400 will not get us to the next 300.
Well, you took away my next question, which was what will incentivize? But we will come to that. We have to look at positive steps that can incentivize. Let me look at the problems. Mr. Gaur, I think Paytm did a great job of cracking even the first 400. In terms of, unlike NPCI, which did not have to make money, you had to make money. Otherwise, it doesn't make sense. So something incentivized you to the first 400. If you can tell us what are the problems you face, therefore.
So the business model is very clear for at least to fintechs and other companies like Paytm. You get a customer because if you look into the customer or the merchant ecosystem, everybody is collecting money. If he takes money in cash, we don't know what is his earning. Why digitalization is important for the India is because if we have to look for 1 trillion economy or a digital economy, we have to have at least 500, 600 million active users. And once we know that what is the pattern of his earning, there is a business model of financing over it. Because today, there are a lot of people who earn good amount of money, but if they need are the need of some kind of financing, they go to an unstructured way of financing, which is actually not giving him good returns in terms of the capital or the interest which he gives. Second is how we do it. So one of the important factor which we have seen, because if we talk about Paytm, we have close to 35 million merchants. And we have merchants in close to 1,200 plus cities, which is way, way deeper. And thanks to the NPCI and RBI, the digital...
Can you repeat the numbers you have?
We have close to 1,200 cities where we have merchants who are accepting payments every month on month. And we have devices which have helped us because if we have to onboard merchants or customers in deep rural or tier 3, it has to be the vernacular. It can't go with English. It can't only be text-based. It has to be voice-based. So where the efforts, the AI, we had a beautiful session on AI previous to us. AI will help us immensely in cutting the cost of operations at least for fintech and banks, because earlier developing an app in a vernacular language was very difficult. But now with the help of AI, it is very easy to launch at a low cost. So I think we took around a decade to get, at least a decade to get 400 million customers.
Yes, yes.
But in next 6 to 7 years, our pace of getting 300 million can be achieved because of the technology which is available today.
Okay. You spoke about getting into your payment system, people who were hitherto using cash. Would you say Paytm has covered almost everyone who uses cash? Because there the problem is different. There you have cash, you have an incentive to join. What Mr. Lakshminarayan is pointing out to that part of people who really are not even that helpful for banks because they are not doing much transaction. They are economically in a different category. Would you say you have covered everyone who is good in cash?
No. I think there is, at least on the merchant side, which I represent in Paytm, there are close to like 60 million merchants in India, which which we feel with the surveys and whatever study we do, and we are close to like 35 million. So it is still a very long journey. If you go to a tier 3, tier 4 city, you will hardly see 8 to 10% of shops having QR. So that journey is still far. And once the people come on the digital ecosystem, they realize that their earning is recorded. If their earning is recorded, especially on the merchant side, they have that tomorrow if I need a capital for my business or to expand my business, I can show that. The problem with in tier 3 and tier 4 cities is they may be earning good amount of money. They're actually more richer than a service class people in the Gurgaon or a metro, but they don't have a earning, what you call the, if you
have a record.
So banks cannot lend them. So they are forced to take money from some local person, and they are just not helping the banking ecosystem also.
Yeah. So what you're saying, Mr. Gaur, is that from 35 to 60 million should be an easier ride for Paytm.
Yes, not only Paytm, but overall ecosystem, because of the technology which we have got today was not available at least even 6 months back. In AI, every quarter there is a lot of change which happens in the technology and the business models.
Fair enough. Actually, I don't know, you're perhaps underestimating your reach. I met a forest, wildlife photographer yesterday, and he was saying that in some remote reaches, places like Pench and Tadoba, he could pay through Paytm because of the voice box. So I think your reach is more than you're acknowledging. Ravindra, everybody is pointing out to why banks are incentivized. Before I get to that, because I think you will have a big tale of woe to speak about, let me first get to what I thought will be predictable answers, and none of you gave those as difficulties. How much is the internet reach in India? I mean, I know of several places where you go out of internet. Or how much is electricity reach? What is the smartphone reach? If the entire family has one smartphone, how much of payments will they do? Maybe one man in the house, maybe occasionally using it. And I'm deliberately saying man, not because I want to be an anti-feminist, but I'm just reflecting reality. What are the ground realities in terms of extending to the next 300 million?
True, very, very true. What you just spoke about, what got us here will not take us to another 300 million users. One of the biggest challenges, like exactly what you said, is the latency and the connectivity. That is where probably the OTP fallouts, you see a lot of those there. So this is exactly where Mr. Lakshminarayan would be able to really help us out with, because the hinterlands are going to be the future for India again. The tier 2, tier 3, 3 or 4 cities, because if you see the average age group, it's between 28 to 30, and with a young population, and the young population are tech savvy, and they're very good with the instruments in your hand, and most of them will be teaching you what to do and what not to do with the phones, and this is what will take us there. But having said that, educating, because the biggest problem today, even we spoke about
literacy.
Yeah, educating them on what to do and what not to do is more important, and that is what we keep reading day in and day out, where people lose out on the money. This is the biggest challenge, because if somebody has experienced that, probably they will have a step back, and just wait and see whether it's going to help them out or not. So that's collective responsibility of all of us sitting here on educating people, because India as a the population in India are very adapting. I can talk to you about one of the incidents that which happened when it was many years back, when I was in Frankfurt. There was a professor from Scotland. A very interesting thing, you need to hear this. So he said he was traveling to India, and from Mumbai they were traveling to Nasik. And when you go to Nasik, there is I don't know if you visited. There's a lot of places where you have sugarcane juice, and those sugarcane juice are done by bullocks going around. There's no electricity there, and they stopped over and to have a glass of sugarcane juice. And once they did, when they did a payment, he gave cash of 500 rupees and they didn't have change. And this man takes out a QR code, and he asked them to pay, and he was surprised, and he was totally surprised. And one of the sentences that he used is, "I had juice in the most primitive contraptions that I could ever see, but made payment through one of the latest instrument that I could ever make. So that is India for you. So I think reaching the next 300 is not a challenge, but bringing everyone together to reach there, that is mostly to educate people on how to do, what to do, and what not to do, because of the population that we are going to see that's below 30, which is going to be the majority of population. That's what is going to lead us there.
Fair point. I mean, that's extremely encouraging, and I think all of us will have such moving instances of people with not having financial and digital literacy, but able to participate in some of the advanced digital contraptions. But let us come to the point that Mr. Lakshminarayan raised, and all of you have agreed, incentivizing the financial actors, because you may not make much money from the next 300 million. Of course, Gaur would have us believe otherwise. He thinks that there are still enough people from whom he can make money. But assuming there isn't much money to be made, Lalita, your take. How do we incentivize in our pre-round of the event? You were referring to how banks were forced to do things with priority sector. So do you think something like that needs to be used to ensure the first push?
Yeah, I think more than making money or incentivizing, what is the incentive for onboarding these people? I think the cost of onboarding and the cost to serve for this 300 million is going to be high, right? So that is very important to get covered. If you do not cover it beyond a point, it is going to be very unviable for anybody, whether the bank which is powering it from the back end or the app which is powering it from the front end. They will have to send some assisted means of onboarding to begin with. That's how the process is going to be, right? And it is important to indemnify this cohort for honest mistakes. If they really lose money, you may have to just, as a gesture, say, "Acha, theek hai, we will refund it to you." So which means that the cost to serve and the cost to onboarding is going to be high. So where will the money come from? So one is, if there is a way in which the top of the pyramid is able to give you more money, which, let's say, we've been talking about seeing whether a particular turnover and above, we can have more MDRs or anything revealed. So there's one way of getting money from there. If there is a incentivization that comes from the government side for pushing this, then those can be plowed in for this 300